Welcome back to FT Markets. Europe or the US? Sentiment can change fast in Gulf, but also in financial markets. With me to discuss what might be a surprising shift in sentiment away from the US and towards Europe is Stephanie Flanders, who's the Chief Market Strategist at JPMorgan Asset Management. Stephanie, welcome to the FT. The story of the last few months, at least, has been very much one about dollar appreciation, which is surely a sign of investors wanting to get back into the US, a stronger US economy. And if we look at the first chart you brought along, these dollar appreciations, history shows, can go on for quite some time.
Yes, if you look at this chart, I mean, this is the sort of broad basket measure of the dollar adjusted for inflation. And you can see, I mean, this goes back to the mid-70s. There aren't very many big trends in the dollar, whether down or up. So once they get started, they can carry on for a long time. So yes, you would look at that chart at the end of last year, and even after the quite sharp appreciation in the second half of last year, you might have said, yes, this has quite a long way to run. And it reflected American strength, but also, of course, weakness in the rest of the world, other countries needing to import inflation from the rest of the world.
But your point goes a bit beyond that, and actually stronger dollar is a sign of strength, but it has an impact, of course, on earnings and has had an impact on earnings.
Yes, well, of course, the benefit that you're giving to other countries in the short term can be a hit for US companies, and we've seen that in the fairly weak earnings
if we look
season.
at our second chart that you brought along, just explain the difference here. We have
so we're just looking, if you look at the pattern of earnings growth in this quarter's earnings season in the US, which has sort of disappointed broadly relative to a year ago. There's a slight shrinkage in the earnings per share.
Still positive,
and it's
of course.
Still positive, but it's focused, or there's been a slight fall year on year in earnings per share, depending on how you measure it. But if you look at the, if you break it down by the sort of internationally oriented firms who have more than half their revenue from outside of the US, they're the ones who've really seen a fall in their earnings, or at least a massive slowing in the growth of earnings.
And energy companies, of course.
And energy companies, of course, are part of that hit. Whereas you have more domestically oriented companies in sort of consumer durables and those kind of areas actually doing quite well. So it's a pretty mixed picture, but you do see that immediate negative, which of course investors have noticed, that negative hit from a stronger dollar.
Okay, if we cross over the Atlantic to the Eurozone, earnings disappointing again, growth very weak. But yet, if we look at the final chart showing the relative performance of Eurozone stocks against US stocks, the Europeans have been outperforming.
I mean, and interestingly, actually, I mean, European earnings have not been that bad. In absolute sense, we would still say they're not very strong because it's not a very strong economy. But relative to the very poor figures you were getting a year ago when earnings were disappointing again and again and again, actually, for the first time, you see people upgrading their estimates for European earnings for the first time in about 4 years. And the numbers have been reasonably encouraging, partly because of that weaker euro.
And of course, quantitative easing by the European Central Bank is a powerful factor in shifting sentiment.
Yes, I mean, I think that's what's interesting. Since the start of the year, I was worrying at the start of the year that the problem in 2015 would be that investors would only be confident in the US. It would become the only game in town. In fact, all the news coming out of the US since then has been marginally negative, and all the news, or a lot of the news, and all of the news coming out of Europe, if you ignore the very large elephant in the room, which is Greece, has been positive, and you see that in these movements in stock markets. But I would say, I mean, all of this still stems from the relative strength of the US.
Absolutely, yeah. And so what happens next? That's the crucial question. Further dollar strength? We have actually seen the euro stabilising a bit against the dollar in recent days, precisely because of the factors you've been talking about.
I mean, it's interesting. Of course, on balance, I think people are still expecting the dollar to strengthen over time and the euro to weaken, but it may not be a straight path down because, of course, as you know, Ralph, in the markets, you should have everything already. Any expectation people have for currencies should already be built into the price. So you might not see a dramatic move from here, but I think the trend would surely be still in that direction towards a weaker euro and a strong dollar. But the US will actually benefit in the end from a strong dollar if it helps countries like Europe recover faster.
Stephanie, we're going to have to stop there. Thank you very much. So, stronger dollar ahead, which would benefit the rest of the world, but maybe also the US in time as well.